All right. Good morning. Comment allez-vous? It is approximately 8:01 a.m. on Wall Street. Stock market's opening in 90 minutes. This is our opportunity as foreign exchange traders to gather as a community. More than or about 19,000 FX traders here at Forex.Today. We will conduct technical and fundamental analysis with the overriding goal of putting together trade plans for today and tomorrow. Let's go. Let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results, but please always stay small, stay humble, focus on the long term, never risk money you cannot afford to lose. Hello, my name is Wayne McDonald. I'm a currency trader just like you. I've been trading for many years. I still am fascinated about what we do. It's always challenging. It's always interesting. And if you get things right, it pays you a little too much. Better than that job you had. Remember when you worked in a cubicle? Remember that? And you had to commute to work? Then you sat in a cube and your boss wasted your time, so you had to work late. Remember all that? Do you remember Kathy? Every day around 3:30 she'd go into the break room and burn a bag of microwavable popcorn and the whole office would smell her stink. Hey, we don't have to do that anymore, because we're currency traders. So isn't that awesome? No, you don't have to commute. You don't have a boss. You control your destiny. How awesome is that? So anyways, ask questions, get involved. I will do my best to help you learn this thing we call Forex. Take notes. Document those notes in the comment section below the video. Therefore, you can search your comments and find very particular subject matter that I've covered over the years. There is thousands and thousands and thousands, or there are thousands and thousands and thousands of YouTube videos that I have conducted. Perhaps a couple of them have helpful information. Now, how do you find them? Well, that's why you want to take notes. So if I cover, I don't know, how to conduct a relative strength exercise, you could just type in while searching your comments, relative strength exercise, and you will find the particular videos in which I teach you how to do that. So that's how you should tailor make and customize your experience here at Forex.Today. I'd like to thank Traders Way for being part of our community as well. They're a foreign exchange broker. They're a boutique foreign exchange broker, and they want to lure you into being a customer. How? They're going to offer you competitive fees, pay you the full swap, give you fast execution. They're not going to trade against you, and they'll provide you world-class customer service. But think about the model. They've asked me to help you become a better trader, a conservative trader, a disciplined trader, one that is successful and profitable with a long-term vision so that you can trade for years and years and years. They want you to succeed. It's in their business model that they want their customers to succeed. Now, it sounds like it's common sense, but it's very uncommon in this industry. So anyways, if you like that, you say, oh my gosh, they're correct. Traders Way is correct. It's a symbiotic relationship. Then give them a shot. Allow them to earn your loyalty and respect. Visit tradersway.com and open up a demo account. And here we is. Yen has weakened a little bit, which is good. That's what we're looking for. And dollar has weakened a little bit. That's what we were looking for. Way back on Thursday, I know it's Tuesday, but way back on Thursday, we picked Aussie and CAD to be the strongest of the week. And right now, Aussie's been strong and Canadian dollar is also strong. Pound went from weak to strong, so there's the surprise. Kiwi is following Aussie, but Aussie hasn't gotten anywhere, so I wonder if Kiwi can take the lead or if it will stall out. Don't know. And Euro, dog food. All right, cool. So let's take a look. Start with commodities. WTI, gold, and Bitcoin. Let's start with Bitcoin. Okay. Trying to get through 50. We were just slightly above it earlier, but here's the thing. Up is risk on, and I'm in risk on mode. So not necessarily Bitcoin, although I love it at 40, right? It shows that at least this part of the global system is risk on, and of course I'm risk on, so this does not hurt. In fact, this supports my theory. Okay? Right on, Hope. Hope's killing it, crushing it. Very cool. Plays you like a Yeah, I remember driving across the Bay Bridge listening to that song. Interesting. Don't know why, but I do. All right, so anyway, so this supports my general theory, my general strategy, so that's all good. Taking a look at gold, it's trying, man, it's trying. Okay, double bottom, higher high, higher low, higher high. Okay, back to the 21. And this is what it's trying. It's struggling with it, though. Okay. Okay, it's struggling with it, but it's okay. It's okay. I don't know. Like, why do we need more gold? Like, or why do people want to own gold? And I don't think the old story works anymore. But anyways. Double bottom, higher high, higher low. What else are you going to do, huh? Well, the next buy zone is way over here. So looks like everyone wants to keep it above 1750. And that's the current bottom. So it's all good. Okay. Okay, and then there's our my oh my WTI, just going more. Now we're at 78 and a half. Lovely till your mum. So that should be good for Canada, Norway, and Mexico. So why don't we look at Norway? La 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 la. Euro NOK? No. Praise you like I should. Euro NOK. No, I don't want Euro NOK. There it is. All right. No. I'm going to change the template to daily confluence, which is a confluence of monthly, weekly, and daily pivots. And then I want to shift the daily to a bearish setup because I'm a burr. The bulls, that bears, did got. Okay. Cool. So what do we know? What do we know? What do we know? All right. Okay. Lower high in the daily sell zone on the monthly M3. So that means we're going to monthly M1, which is lower than we are now. Okay, lower low, lower high. In this case, it didn't kick off the pivot zone. It kicked off the 21, so it's very bearish and aggressive. That produced a new lower low, so today's short should have been the lower high. Roll reversal. Cool. So hopefully today it continues with its low, and tomorrow we will be selling around here for tomorrow's lower high. So what I'm hoping for is we come down to target, so we'll cover that in a second, retrace back up, and drop it like it's hot. Drop it like it's hot. Drop it like it's hot. Okay, let's see. Today's target is down in here. Okay, that means this will come down a little bit to about here. And you have your up and your out. However, do you remember this MM3 to MM1? MM1 is right here. So you could just take your money and run. Because if we're hitting this on the 5th or the 6th, that sets up a counter trend. So you might want to just take your money and run. It's your call. So tomorrow, okay, tomorrow might be the bottom. Now look at that. That'd be quite a breach, huh? So if we do get lower than that, could be very interesting in the sense that, you know, it's a long ways down. Next stop is 8.4. And then down below there, 8.2. So if we have a multi-month move, right, it could be a good one. Okay, meaning this whole move here is from 9.0 to 8.0. That'd be awesome. And for that to happen, Brent will probably be on its way to $100 per barrel. What do you think? What do you think? Smell like a plan? Cool. So let's take a look at some other oil beneficiaries. That's our kitty cat. We want to be short this. Okay. Okay. There's our trade plan from yesterday. We want to sell in here. And our target is here. So it's worked a little bit, but not a great. But this should be the plan. Okay. Oil going up should move this down. Okay, great. Another one would be Mexican peso. Okay. This one's gone a little high. Little high, little low. Easy come, easy go. All right. Cool. So hopefully kind of the same move here. Bring it on down. Okay. Okay, what do you think? Something like that. Cool. All right, let's go back to the dollars. Let's take a look at piggy, piggy, piggy. Okay, I showed in the day trading group last night a couple of different ways to take trades. This was the most conservative one. And I said the cool thing about your conservative trades is that you're less likely to lose big money, right? Because they're conservative. But of course, if that's not likely, then your risk is you miss your moves. And I said, and that could happen. Okay. And so in this case, beautiful trade, missed it. Okay. So my choices were obviously central pivot or M2. Never quite happened. Although we haven't made the higher high, so there's a little bit of a concern there that we didn't breach. So I'm going to mark that. This could be trouble. Let me back this out a little bit and get rid of that. Okay. William, I went over that a lot 2 or 3 weeks ago. So just go back and watch those. I mean, I went over them almost every day. So no, I don't want to do it again. Okay. Now this one was, how did I do it? I don't remember. Obviously not the conservative one. I don't remember this being the aggressive either. Is this one where I moved at 50 pips or 66 pips? Let's see. Can't grab it. No. I don't recall this one. Okay, obviously I have it pointed up. Obviously it's come down a little too much. I'm not happy with that. You can see tomorrow's pivot's already fallen. So in this case, I gotta nurse this. I don't want to add to it. Of course, it's not profitable yet. I end up having some technical concerns about it. I also know Euro is the weakest of all. So probably based on relative strength, the worst possible trade I could have made. And I'm down, what, 15 pips? Okay. Take a look, maybe long term. Yeah, nothing really good about it. Okay. Now, of course, if it had stayed above this area, it'd be brilliant. So it dropped 10 pips below that, and now it sucks. That's trading for you, right? USD Kitty Cat we already covered. Take a look at Aussie. Aussie was, I think, the example of how to aggressively buy. So I think we were here in Asia. And so I had shown the other one where I think it was pound. I put the pound entry very low. And the funny thing is that one didn't go low. And then this one I just bought. I'm like, so this is how you do it. And I went, boom, chow. I went long. I'm like, now I'm in. Now I'm either going to lose 33 pips or I'm not going to lose 33 pips. But the issue is I'm making the decision that I want to buy it, and then I'm at a reasonable price, and that this is the daily plan, and I'm on an hourly 21 and blah, 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 blah. Don't need 9 other reasons. My main choice is, do I just get in or do I try to get a slightly better price with a limit order? And the right decision, well, if this takes off, I was a bull here, but never profited from it. So I don't want that. But I also don't want to just buy here and get stopped out here. there has to be enough room for this to breathe, right? Okay, so it's always a decision-making process, but one of the themes of yesterday's day trading group was, people overthinking. So I was trying to show, 2 or 3 different ways of just do it, man. Just get in. Let the math work out, okay? So anyways, so I guess that's my 3rd trade, and this one is now profitable. Not ready to move my stop yet. Okay, trying to climb the beanstalk. Okay. I guess what I could do is move all my stops this way. I think that's enough time. Cool. Cool beans, cool beans. How about this one? How about this one? Come on, Kiwi. I don't remember this one either. This might have been the aggressive one where it was riding this here, and I'm like, so you could just buy it. So I buy it, and then I'm like, but then here's the challenges. And I don't remember the conversation. So if you are interested in those subjects, maybe you should join the day trading group. By the way, I lowered the price of the day trading group by 30%. Sorry, 33%. So you don't need a new link. Just use the old email, go to the website and sign up. You don't need a coupon code. The price is just lowered. So anyways, looking at this one, this was way out of position. Okay. Oh, yeah, thanks, Big Perm. Okay, the buy zone was here. So this is an out of position trade, a tough one to take. Stop reasonably placed. And now I'm at break even. So I can't really move this. I mean, I guess I could move it a little bit because the plan is, it needs to go up today or it's going to drag this pivot down, and I don't want to be in that. So, I mean, what am I going to do? Move it, what? that many pips? All right, 3 pips closer. Really? 3 pips closer? Whatever. Huh? So this should make a higher high. The target here is 70. If it's not going to hit 70, if it's going to get near 70 and then collapse on us, I don't want to be in this anymore, because what that would be is a lower high, lower low move off of a monthly central. And that would be very, very, very bearish, huh? That reminded me of Godfather, right? I speak English. Monday, Tuesday, Wednesday, Saturday. Why you say that, Mike? I speak English. Monday, Tuesday, Wednesday, Saturday. Yes. Yes, all of this is based on fundamental analysis. Okay, fundamentals. So fundies, macro econ, an analysis of monetary policy, whatever, policy, and money flow, or global money flow. Okay? I start with that first. Okay, SNDY. I start with that first. Okay? So I have a bachelor's degree in macroeconomics, and a master's degree in financial management. And so I love all of this stuff. Okay? So I start with this first, and I create a theory, and then I use price-time analysis, aka technical analysis, in a scientific methodology format of confirming or denying my hypotheses. So in situations where I want to buy and technical analysis tells me to buy, I buy. And then when technical analysis does not confirm, but instead denies market conditions, not my hypotheses, but conditions, then I stop. I just stop. I go cold. Okay? Right on. Great, great, great. All right, so kitty cat, this is one we want to go up. I can move my stop a lot closer, so my stop is way down here. I can move it maybe, I don't know. I guess it could even be here. Okay, so this is yesterday's day trade. And here's the entry. I guess I need a different color. Here's the entry. And all we've done is gotten up here. So I'm in at 80. It's made it to 80. I'm in at 88 and made it all the way to 88.40. Okay. So what I'm looking at now is tomorrow's setup, and it's still kind of the same, right? So today's plan would be buy it in here and take it north. Okay, this is what tomorrow, right? What we're looking at. So that's why I can move my stop here, remove some of the risk. If you're really worried, you move it here. Now I'm break even. And now tomorrow's trade is somewhere around this price, 88.20-ish. Take it to the next level, which is also the weekly target. Okay? So remember, this is fundamentally driven. Okay, we have seasonal weakness for yen, and then correlation with oil prices for CAD, producing analysis that suggests Okay? What do you think? Okay, that's kitty cat. Start on Aussie. The trade plan, the day trading plan last night was allow for this to rise. Let me do this slightly thicker. Okay, allow for this to rise. Okay, so we were here. So I bought it here. That's what that gray line was that I made a couple of days ago. And now the trade is profitable. And we should be on our way here. Although I don't see my stop loss. Boo, I don't like that. I don't know why there's no stop. Ooh, that was bad. Bad trader. All right, so anyway, so that one is basically a little bit profitable. So I think about 5 of the trades last night were profitable. I think only the euro is not profitable. So anyways, it's kind of trying to work its way up, struggling, of course, as we get closer and closer to old levels of resistance. And we knew this was likely to happen, but we got to keep our eyes on the prize. You either believe in this move or you don't. Okay? So we're struggling to breach 81. That's fine. Okay? That's fine. I think the real challenge here is 81.22. So, you know, up there. Okay? The interesting thing is if we can get through that, we're on our way to 82 and beyond, maybe 83. So we got to get through 81. If we can, 82 and 83 are next. Okay? 82 is going to be a real challenge. Okay? So anyways, that's another 100 pips for this trade. Cool. Nice. Neato. Great. Okay. Mission action says, hey, why are commodities and metals falling? Well, A, they were overpriced. But B, if you're talking about like gold, for example, central banks, in particular like India, we'll pick on India right now, right? They're buying and selling gold to manage their monetary policy. Okay. So, for example, a year ago, in the worst part of COVID, when India was being shut down for a second and third time, the Central Bank of India was buying gold and devaluing the rupee. The balance sheet would still be balanced because they have less rupees in the vault, but they have more gold in the vault. But those rupees are now in the interbanking system, which means supply of rupees gone up. Therefore, the value of each rupee has been diminished, and therefore doing business with India is more affordable. Okay? Mission Action says, well, how can you tell if it's overbought or oversold? Well, that's what technical analysis is. I'm not talking subjectively. I'm talking about technically you look at things. All right? That's what an oscillator is, for example. Okay. All right, Beast is one that we talked about a lot. These red lines I think we did yesterday. Do you remember? I said this is where bears would have sold and that they were profitable for a while, okay? And that they would have jammed their stops and that we should quickly be able to breach through them, and those stops being triggered actually accelerate the bullishness. Okay? And you can see we went through almost all of them in just 1 hour. So look, people sold here. This is what we talked about 24 hours ago, guys. People sold here. Remember, they sold right at the top. They sold maybe a little early on the way up. They sold here. They sold here. Some sold a little bit late. But the thing is, what we talked about 24 hours ago, we were at the bottom here. We were here. And I said, these guys now have, depending on where they entered, jammed their stops. Jammed their stops, jammed their stops, because now they're profitable and everyone's jamming their stops at break even. So I said, since they're wrong, remember I'm a bull, so I believe the bears are wrong. When we take the day trade, and this is the day trade, when you get up here, you'll make your money by triggering their stops. Boom, 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 boom. Cool. Then I talked about it. So that was at 8 a.m. yesterday. I talked about it again at 3 p.m. with my day trading group. And then I did yet another overview at 8 p.m. with the day trading group. And now it's totally worked and everyone's gotten paid. You're welcome. Great. Great. Nice trade. Cool. But the thing is, it was one of the ways I set this up, if you guys remember, was that you have to understand your adversary. Where did they behave and how will they behave in the future? Okay. Cool. Right? Oh, yeah, I missed that part. Thank you, Jim. Yeah, mission action says hyperinflation. Look, okay. Let's say we have 6% growth, GDP, and 5% inflation. Okay, it's nothing. It's nothing. You're a million miles away from hyperinflation. So I don't know where you pick up language like that, but if you're reading somebody else's notes or if you're following some YouTuber who talks that way, you really should stop. Okay? You should quit them. I want to quit you, right? I mean, really, it's wrong. It's just, you got to be very careful who you listen to. All right. Okay. Got to be very careful who you listen to. Okay. All right. All right. All right. Okay. Say, a little bit too, for those that are hearing a lot about stagflation, you can get something that looks like stagflation, because I notice a few people still bring this up in the chat. Okay. I already covered this. I covered it in great detail on a stream, I don't know, a month ago. It looks like stagflation because we have supply side constraints. And in many ways, it is stagflation because the high price lowers demand. And we're trying to create demand. So the lowering of demand is the stag and the high. But notice that we're in a free market. So eventually the supply side constraint will go away. And the high prices will fall because there's no demand. So if finally we get the factories running, but nobody wants the stuff, then they'll lower prices and the inflation part goes out. We deflate on price, but because it's a free market, then demand increases again because prices have normalized. And what happens is you get something like this where you have demand, you have supply. Okay, supply falls, prices rise. Okay, then right? So what'll happen is this will all shift. Demand falls. Okay, and therefore prices come back down. And eventually, and of course I didn't draw this right, but what you'll see is a double shift is always indeterminate. That's why I have a degree in this stuff, because a double shift is always indeterminate. Okay, you got to know that. But what we do know is prices will come down, and then demand will pick back up. And anyways, we'll work our way right back to where we were, the equilibrium. So it's not stagflation. It's just that in that moment, here's normal supply and demand. And in this moment, we lack supply, so prices are high. And we're like, oh my God, high prices are going to kill demand. Yeah, well, then demand falls and then prices fall. And then we work our way back to where we were. That's not stagflation. That's an exogenous supply shock. And capitalism works its way out of that naturally. Now, it might take a year or two, but who cares? Okay, you probably have longer to live than that. Stagflation is different. You got demand, you got supply, and the government says on price, you're not allowed to charge more than this amount of money. And the whole thing collapses and you get stagflation. That kind of stuff. Okay? That's different because you can't work your way out of it. Free market capitalism cannot work its way out of that. That's stagflation. Okay? And that's sort of like the UK coming in and saying natural gas prices are too high, so you're not allowed to charge high prices anymore. 6 months goes by and half the businesses have gone out of business. And now nobody has any natural gas. That's what happens. So anyways, look, Aussie yen making money, CAD yen making money, even Euro yen trying to get its move, pound yen making money, Kiwi yen making money. So far, all good there. Okay, therefore these should go up. Okay, pound yen trying. Euro dog is still the dog. USD kitty CAD doing great. Aussie dollar doing great. And Kiwi dollar doing great. So, pretty good. I think there's 6 out of 7 trades are working and profitable. If that's the right number. It was enough. Maybe it was 4 out of 5. Maybe it was 5 out of 6. I can't remember. But anyways, it's all good in the hood. Life is good, guys. Life is good. Okay? So, if you're a subscriber to this channel, I will see you tomorrow. If you're in my day trading group, I will see you later today. Okay? Remember, the day trading group is only open to members of my swing trading group. The swing trading group is only available to those people that have signed up at FX Bootcamp to watch the 30 or 40 or 50 hours of training videos. Okay? Because it's about learning. You got to learn first and then apply. My live groups are all about application. I don't do a lot of explaining because if you don't know how to trade, how the hell am I supposed to help you? So go watch the videos. Watch them twice. It'll only take you 100 hours. Okay, one Harvard class cost me a lot more than 100 hours of my time. Significantly more. Probably several hundred hours per class. Okay? Okay. Yes, Miss Action says back to Jim, yeah, in economics, hyperinflation is very high and typically accelerating inflation. Yes, but if growth is higher than inflation, it's not a problem. And not even a million miles close to hyperinflation. So you have half of the concept correct and the other half incorrect. Okay? So if you make 10% more every single year, your salary goes up 10%, but there's 3% inflation, which is outrageous inflation. 3% a year is crazy. But you keep making 10% more, you don't give a damn. You keep spending, everything's happy, you go on vacations, you buy cars, right? Because your growth, your financial growth is significantly higher than the deterioration of your money. So in real terms, it doesn't matter. Okay? Great. Oh, yes, and apparently someone wants to know how to join. You just go to fxbootcamp.com and insert a credit card. Easy enough. I don't ask you who you are, what religion you are, what country you're in, what sexual orientation you are, what your gender is. I don't care. If your credit card works, you're welcome to join. Okay? Oh, okay. Yes, but I was arguing that you can't assign specific percent or number to the definition of hyper. Oh, I see what you're saying. Yeah, I suppose. But, yeah, I mean, hyperinflation you get from a broken market. So, you look, like, if you're talking about a hyperinflation, you're talking Argentina. Okay? You're talking Venezuela. Venezuela. Okay, you're talking about Turkey. This is where the supply and demand equation has broken down, okay, from mismanagement. And then on top of that, the solution to mismanagement is more mismanagement. And money fails. Okay? So it's broken failure. Okay? It's negligence, it's incompetency, it's failure on top of failure on top of failure on top of failure, to the point that there's no value in the money because the government and therefore the economy has no value. Okay? So hyperinflation is reserved for very, very specific situations. And so when people bring it up as, the United States is going to run into hyperinflation, it's a misunderstanding of the concept. But anyways, it's all right. It's all right. Cool. Peace on earth. May the pips be with you. May your profits be above average. See you tomorrow, everybody.